last few weeks, Bitcoin dominance has been going down. But now that we're past the 100K, the question is, will Bitcoin dominance continue to go up or will it slow down? Here to discuss is Patrick, also known as Crypto Rookies. How you doing, Patrick?
I'm doing great. It's pretty exciting time.
It is pretty exciting times. And the reason why Bitcoin dominance is so important for a lot of people is because we want to know when is altcoin season. And based on some of the way that tokens have been running, you can argue that altcoin season has already started. Some of these tokens are already running. I mean, we saw some tokens from last cycle that were running last week, and I have a question for you about that as well. But that's really the main question right now: is are we going to see this continuation of the running of these altcoins, or is Bitcoin going to take the spotlight for the time being?
Yeah, maybe I can share my screen briefly and see. So, to me, there's several factors. Like if you just look at the Bitcoin dominance chart, like obviously people who do trading with technical analysis, they see this as a very big kind of like the dominance is going down. So for me, I was expecting it would probably go higher because of the ETF. To be honest. I thought we were just not done. But typically speaking, when there's a sharp decline like this, it's when the altcoins start to run. So right now we broke the kind of the diagonal of that. The trend has been broken, so we are heading down. And right now, there's a bit of a going back up a little bit, but like a lot of people assume that it's normal. Like you go down, then you retrace, and then eventually you will like probably hit this zone and then will start heading back further down. So that's the consensus of people who trade that what they believe in. In my opinion, I'm not convinced of that. And the reason is that if you look at like here, I'll try to zoom in a bit. The ETF flow, we never had that in the past. So to me, the Bitcoin dominance has to factor this in right now. And we never had that in the past, but like just yesterday alone, like what is this? Is it's in million of dollars. Yeah, $500 million of Bitcoin that was bought. And like the day before, almost 700 million, like 350 million, 320. Like every day we're going up a lot in terms of the ETF, and all of those buyers, they're not going to rotate their capital. So typically speaking, when we're talking about like a Bitcoin dominance falling down, is people get tired of having like small incremental gains on their Bitcoin. So they sell their Bitcoin to go chase things that will grow faster. But those ETF, like the institutional, the pension plan, the treasury of the government, they're not going to do that. So obviously, they will keep buying for the next quite a while, and their pocket is very deep. So at this rate, like $600 million per day, like let's say that it's I don't know half a billion per day on average. I don't know that the dominance will go that far down. To be honest, I would be highly surprised because we never really had that like very big whales. Typically, they transition and they do their capital rotation, and so the market is segmented. There's the small retail, like people like us. Then there's the like big retail that is like whales, and then there's kind of like a more organized institutional player like market makers. And now this cycle we have like pension plan and governments and like big company that are buying those ETF and all those things for their treasury and to basically reduce the risk of currency debasement.
As high as the inflows are for Bitcoin, wasn't there at least a day recently where the Ethereum inflows were even higher?
Yes.
So, I mean, what was the last time we saw that?
Yeah, that's pretty new. And recently, the thing, the Ethereum ETF, uh, like overall, it started to be in the positive because in the past, like the grayscale trust was selling more, so we were in negative overall for quite a long time. So it's only recently that we finally started being positive, net positive, and I think that there was a pretty big spike, definitely in the last few weeks on Ethereum. Uh,
it just appears that we think that this time it's different because now we have institutions, but in terms of like the chart, it seems like everything is playing out very similarly to what it did previous cycles. So it's almost like the inflows are correlating with the charts.
yeah, but the thing, I think people need to assimilate this and change their strategy and their mindset. Because the thing, market makers, that's what I was saying, is that like if you exclude the ETF and the pension plan, the governments and all that stuff, market makers are the second biggest, like in terms of size of deep pocket. So they are the one that, historically speaking, have been driving the market. So, and the thing, we can talk about the zombie coin of last week, what happened, but to me, that's the market makers doing that. But saying if you look in the past 24, like since
Wait,
in the
wait, wait, wait,
last,
wait, 1 second, Patrick, before you move on, because you mentioned something that a lot of other channels are also talking about this.
yeah,
Uh, they're saying that a lot of these quote unquote zombie coins, old coins, legacy coins, however way you want to describe them, a lot of them is driven by retail investors that are coming back in and they have no clue what's, any updates on the technology, what's happening in crypto. And
yeah.
so you're saying that it's not necessarily the old retail coming back. You're saying that it's more of the market makers?
So market makers have leftover inventory of previous cycles because they didn't manage to sell everything that they had of Sandbox and all of those projects. So to me, if they want to get rid of that, they don't want to do it at a low price. So in my opinion, if I was them, I would pump them uh, to get people to chase after that. And then as people start to buy, then I would dump on them. And then all of the gains that I would cash out, then I would start going to the next narrative. Because the thing, all of them are moving at the same time. And sure, like they pick the one that are available on Robinhood, on various other places that those kind of new retail or old retail are coming back to. But I don't think those people would chase Sandbox necessarily. Sure, they know about Sandbox, but they lost a lot of money on Sandbox. So why would they go back to the thing that they lost money on? Unless it's because a few of them maybe did actually make money, but why did they left? They left because they lost money somewhere. So to me, that's what doesn't make any sense. The only thing that makes sense is that if you have market makers pushing this narrative, then getting KOL to talk about it, pushing the narrative. Oh yeah, the old coins that are available on Robinhood are starting to pump, and then they make it pump, they push the narrative, they get people to be excited about it, and then they will crush it. Like if you look at Sandbox, I think it had a good pump, but it's nowhere near what it was. Imagine all of those people who bought at the top here and they lost all the throughout the bear market. Why would they go back to buy the same thing that basically got them to almost went bankrupt? It doesn't make any sense. I think to
So
me,
you don't think it's people that are seeing, oh, look at where the price is now, look at the potential of it running. It has like another 100x to go. You don't think that's the thought process?
I, to me, people will chase price. Nobody, even if they know that Sandbox exists, they will not go jump on Sandbox unless they see the price going up. And that's why someone has to push the price to make this narrative to be a self fulfilling prophecy, basically. But if you look at Sandbox, the unique active wallets that are active, it's a joke. It's 3,000, let's say, in the last 24 hours, like on yesterday. So 3,000 wallet, but then the market cap of Sandbox is, I think it's several billion dollars. So you have a market cap of several billion dollars, yet fully diluted of $2.7 billion, but you have 3,000 users per day on like the active. To me, that's complete nonsense. It's what is that? 2.7. It's basically that each users is valued at almost $1 million. So
Hmm, I see.
it makes no sense. So, and I think everybody will buy the token if the price is going up and they expect that it will keep going up. But to me, this was a trap set by the market makers because they have leftover inventory and they want to liquidate it, and they don't want to do it at the lowest possible price. So they probably went and bought some of the sandbox token to push the price up to just get the ball rolling, and then they basically pay a few KOL to start talking about the narrative that those coins are running because it's what's available on Robinhood and all that stuff. They will make all kinds of fake story just to make people to buy it and to jump into it. And I think
I mean,
in the
speaking of fake stories, there's a lot of that on happening on TikTok about XRP going to 10,000. I mean, have you
yeah
seen some of these insane price predictions?
So the thing, Sandbox is not on this list there, and XRP, Stellar, Algorand, IOTA, those are some of the zombie coin that has actually run alongside Sandbox and a few others. But at least in their case, it's because it's part of like the ISO something for kind of a banking infrastructure on a decentralized system. But to me, I will never jump into this because to me, that's just another CDBC that is disguised as something else. I have zero interest in buying into any of that stuff because someone is getting rich on my back. It's Ripple. Sure, there's a community that is there, and they probably want to destroy me for saying stuff like that. But I just there's no real use case anymore of this. The banking infrastructure, I just don't think it will really run on this. I think it's again, it's a narrative that they're trying to push to resuscitate all of those zombie coins, but there's barely any users to any of that stuff. And even if the bank were to actually move into it, I don't want to help the bank. I'm perfectly happy with actual real decentralized systems. So Solana, Bitcoin, and all that kind of stuff, and Ethereum.
Well, the other part of this is people are looking at these brands as US based. And
Yeah.
so with Trump going into office, for some people this looks very bullish, right? So
Yeah.
there's that part of the narrative as well. But let's assume that what you're saying is true. Market makers are manipulating the market, these older coins. And so how long will this last? And where do you think the liquidity, like where will it rotate next?
Yes. The market makers will rotate to whatever advantage them. So, and I think because I don't work directly internally with them, I don't know exactly. I think anything is possible, like gaming and all that kind of stuff. Me, I don't want to invest in gaming either for similar reason because the cost of development is massive, but the users that they can attract is not any better than other projects. So to me, I'll stick to meme coin and a few other projects like Solana, Drift and things that have real use case that with real users that generate a lot of protocol fees and all that kind of things. So I'll stick to that. But I know for sure that market makers will push other narrative along the way. But you're playing a musical chair, and do you want to get caught trying to chase the pump, and then once they dump on you, you end up actually losing money, and then you try to chase the next thing? To me, I'm gonna stick to what I'm doing now. The thing, meme coin didn't do that well in the last week or two, but it doesn't matter. I know it's gonna come back. So in the meantime, I'm accumulating. So it's all good to me.
You're saying that meme coins is going to come back. It seems like it's either altcoin season or meme coins super cycle. Why haven't we seen both together?
But the thing, the market makers move the market. It's not retail that move the market. Retail come back to buy what the whales and the market makers want to dump on them. So they are never been the one who move the market, in my opinion. That's just a figment of people's imagination. It's part of the narrative. If you have like a few $1 billion invested into market making, you have the money to pay the media to say whatever story you want and to create some narrative. You hire a bunch of KOL and you push whatever you want. To me, I don't believe that kind of stuff. So, but I refuse to play the game of chasing their pump. I would rather, because right now, like we know that Coinbase and Binance and Robinhood are listing meme coins and other token on a periodic basis. So in the past 2 weeks, even though the meme coins are not doing that well, every day one of the meme coin in my bag, my portfolio, is actually getting a pump of like 20 to 60%. I did catch the trade of Mudeng 60% up in one day, like just 2 days ago, I think, or yesterday. today it was I forgot which one it was, but F WOG, I think. Anyway, every time that they list a new token, if you happen to be in the good meme coin that are large enough on each different chains, uh, they get listed, and the announcement make them pump quite well. So I think that alone, it's not widespread, but it's still a very good return. So
What about the AI narrative? Because a few months back, you were
yeah,
pretty active in that space. You even had a spreadsheet that you created where you had like a list of all the different projects that you were
yeah.
invested in. There it is. Yeah.
But I think I didn't
Um,
invest in any of those projects almost, but
okay, so
I did update the file today, and that's quite impressive. Like, so this is the price as of today, and this is the price at the start when we talked about that a few months ago. And then I put the percentage gain, and as you can see, virtual ended up running 5,000%. Like that's an outlier. This one is down 96%, but this one is down 77, 78. But almost everything else is up quite a lot. Virtual, like that's an outlier, 5,000%, but even this one, 300%, 400%, 300%, 200%, 300. The thing, this entire thing of portfolio, I just picked very low market cap project in AI, and all of them almost did pretty well.
and this is running on the whole AI agent narrative. Is that correct?
Not all of them, but virtual is the AI agent, and this one did like extremely well.
I
And for
see.
me, I was not super interested because their liquidity pool was all in USD, but otherwise everything else was in the green in my criteria. So it was in my orange list. And
But
as you see,
what do you mean by their liquidity pool was all in USD and that's why you were not interested in virtual?
because if your liquidity pool and your liquidity is in US currency, that means that in a bull market, you're being dragged by the US currency kind of going down in a sense. As opposed if you were to have all of your liquidity paired with Ethereum or Solana or Bitcoin or whatever it is, and then like let's say Ethereum is getting a 2x, your liquidity is getting a 2x, and your chart end up looking a lot better because you're basically pegged on a better asset than US currency. So to me, I would not peg on US currency in a bear market, but I would peg, sorry, I would only peg on US currency in a bear market when we are approaching one. Otherwise, in a bull market, I would much rather have my liquidity pegged on something that is growing, especially something growing fast, like Solana, for example.
But I mean, based on the numbers, it seems like it's growing very fast, right? As you said, it is an
Yeah,
outlier.
yeah, but so imagine that their liquidity would have been pegged on Ethereum, and Ethereum did an extra 40%. Then it's 40% leveraged against that 5,000%. So that's a few other 1,000% return. It's pretty incredible when you multiply like this. So
Yeah. Yeah, so the AI narrative clearly is still pretty hot. But like you said, let's not chase the narratives. Let's
yeah,
just stick to things that are tried and true.
but the thing is, like
So,
if I computed the different category, like I had my red list that I didn't want to touch at all. So last time I updated was like -10, yellow was -10, and green was 12 positive. But this time, the thing it the return anyway. Uh, Even the red list, it went up on average 130%. The yellow list went up 680%, but that included the virtual protocol that was in that list. So if you exclude the virtual, it was still 46% growth on average. And then my green list was a plus 165%. But I think this is what maybe 3 months ago. I forgot when it was, but so 200% in 3 months is still quite acceptable. So yeah, looking into
yeah,
this, it's like the strategy that we had there still makes sense overall.
but let's talk about what would you do now? Like, let's say you're new to crypto, you see 100K Bitcoin, great, that's exciting. I want to be part of all of this excitement. Where would you start? Let's say today you had $1,000 that you could put into the market.
Yeah.
How would you go about allocating that $1,000? And this again is just what you would do, obviously not financial advice.
Yeah. So maybe I'll share my screen, but uh, I need to activate this first. Okay, so for me, I would use a margin account on a centralized exchange. I would buy Bitcoin. Even I know the price is a bit high right now, but I would still buy it, and then I would use it as collateral to buy more risky assets. So I would go with a bit of Solana because I think like Ethereum did well in the last few weeks, but I think Solana still has a lot of growth left because the metrics are really strong in terms of user adoption and all that stuff. And then I would go with pretty much meme coin. But I would go with maybe with Drift and a few other protocols that have a large amount of protocol fee generated every day. But overall, that's what it looks like. This account, I started it. Let me restart that again. So 2 months ago, I started this new crypto challenge of growing $500 into $50,000. And I want to do it in 12 months. But it's been 2 months and I'm already up to 2,265 out of 500. And that's just 2 months ago. So this strategy, the only thing I've done is buy Bitcoin, then buy a bit more Bitcoin using the margin. So basically I took a loan to buy a bit more Bitcoin and I took loans to buy Solana. I didn't even touch meme coins in this case, but I still managed to do more than 300% in 2 months. So to me, I would keep with that strategy. But the one thing that I would say, just to be on the safe side, and maybe you can refer one of my video on my startup self-funded channel. But every 4 years, when there's the inauguration of the new U.S. president, there's a drop that is quite significant. Every year, like every 4 years, it's about 30% the market drop every time like that. Maybe I can zoom in a bit. But anyway, maybe we can just refer to my other video and maybe take some screenshot. But let's say typically it's in the first week of January. There's a Bitcoin drop of like 30 to 35% right before the US presidential inauguration. So right now I would take some profit like on that account. I just loaded up a bunch of sales to basically sell the Bitcoin and the Solana that I took on margin. So I will keep the Bitcoin collateral, the one that is bought on spot, but everything that I bought using more kind of loans, then I will start to dollar cost average out before the first week of January. And for Bitcoin, I'm doing it between $110,000 and $130,000. And for Solana, I'm expecting that it goes to about probably $300 in the next few weeks. So I will start to exit above 300, between 300 and 360, basically. And the thing, if I see that by the end of December, we didn't reach those price points, I will still sell everything at whatever price it is and just keep the Bitcoin as the on spot. I will not move to US currency, basically. But then if the market drop 20% or more, then I'll start to dollar cost average back in the Bitcoin and Solana position, like I was doing that there.
So sounds like Bitcoin, Ethereum, Solana, and meme coins. That's essentially your strategy moving forward.
Yeah, I think the utility is good. And I do invest in a little bit of utility like Drift and stuff like that. But overall, it's very few far in between that you have protocols that actually have a large amount of users and generate real revenue. A lot of them have very few real users. It's all speculation. So for me, if it's all speculation, why not just stick to meme coin? Because you don't have the problem of the meme coin spending millions of dollars building technology that nobody uses. Why waste that money? Just invest it elsewhere or keep it into the liquidity itself. And I think I would prefer to invest in meme coin that don't spend crazy amount on marketing. Some of them do, and it kind of work short term, but ideally, if you don't have to spend money on marketing and it's your users that spread the words like through word of mouth, that's better because that's cheap marketing. It's a cheap user acquisition. So, and then that means that your liquidity stay in liquidity to support your token price and the pools and the market making and all that stuff. So to me, that's a much better way of doing things.
Patrick, also known as Crypto Rookies, thanks so much for all the insights. I'll be sure to include all of his links in the description. If you're watching this and you found this video helpful, please continue to watch these videos. Consider subscribing, like the video, and definitely follow Patrick on Twitter, or X, I guess is what they call it these days. Patrick, thanks so much for your time.